Hey, what is up, everyone? Today I'm going to be filming a video over SMT divergence and what that may look like in the market, how to find it, how to use it, basically all there is to an SMT divergence. If you find this video informational at all, please give me a like and subscribe. It helps me a lot. And without further ado, let's get right into it. This will be us going over the broad definition overview of what an SMT divergence is and what it means. SMT divergence is between two correlating assets. That means it's two assets that either correlate inversely, which means if one's weak, one's strong, or correlating together, if one's strong, then the other one should be strong as well. And the S&P and NASDAQ is what I like to use, mainly because I trade futures. And what this means is that if the S&P is strong, then we can infer that the NASDAQ wants to be strong as well. And the reason we use that is because the divergence happens when liquidity is swept on only one of the assets. Now there's there's a divergence. One is going higher while the other one fails to go higher. A bullish SMT, which would look like if one asset formed a lower low and then another asset formed a higher low. And I'll explain that to you better when we get into charts, but just for now, think of it as one is failing to go lower than the other, is a bullish SMT. And the inverse on a bearish SMT, it would be a lower high. One asset is failing to reach higher and ends up going lower. And so if there's an SMT formed, then price is likely to reverse. And so we can use an SMT divergence to predict when price is going to reverse. All right, so now we are going to go over what an SMT looks like on the line chart. I like to go in with just lines just because I think it makes it even simpler for someone to start learning. We have ES and NQ, which are my two assets that I trade. And there are a positive correlation. So what that means is that if ES wants to go up, then NQ probably wants to go up, and vice versa. If NQ starts to go up, then ES is probably going to follow. We see that ES swept down the sell side, right? We went low, we made a lower high, and then we made a lower low, right? Which is a sign of a downtrend. So we should be going down. But the problem is that NQ went down, made a low, made a lower high, and then made a higher low. And so what this would be is us forming this higher low would be an SMT. The reason why this is an SMT is because price fails to come down and sweep out this liquidity, entailing, hey, we want to start making moves up, because after a lower or a higher low is made, then a higher high is probably made after, which is a change in trend. And by finding this, we can kind of start finding buy signals in the market. Okay, now, so we went over SMT, but that was a bullish example. I'm going to show y'all a bearish example. And I also want to point out the fact that NQ isn't always going to be the lagging index, or ES isn't going to be the lagging index. They play off of each other. And the way you know if it's a bullish or bearish is if it's bullish, you're looking at the lows. You want to see a manipulation at the lows and a failure to sweep at the lows. On a bearish example, you want to see the exact opposite. You want to see buy side get manipulated, and then also buy side not be able to get taken out. That was a quick little just like debriefing of how to look for an SMT, because I know that it can be kind of weird not having like a set plan of ES is always the one that's going to be lagging, or NQ. Now to get into our bearish example, we will be going over ES and NQ again. You can see that here that NQ made a low, a high, a lower or a higher low, and then a higher high, right? Indicating a bullish trend. ES, we could see that we made a high, we made a low, and then we failed to make a higher high, right? Indicating that we put in a SMT, and now that we put in this SMT, we can expect that this sell side is now the new draw on liquidity instead of this buy side. All right, guys, now transferring into the actual chart, into the candlesticks and wicks, we can see that we have this 4-hour buy side and 4-hour sell side, and we see that this 4-hour sell side was failed to be swept by ES, but on NQ, we swept it. Here's a little trick. Y'all can go to this number 2 spot, and so now you can look at both the charts at one time. If you move your cursor, you can see that this liquidity was made at the same exact time. Therefore, this is a valid SMT. You can see up here, this is literally what we saw before, just failed to sweep, while NQ did sweep, and now we can assume that the sell side will be our and draw of liquidity, and now we can see that price filled, and it doesn't get much simpler than that. This is a bearish example. The bullish example would be the opposite. Like I said before, make sure you're focusing on the highs if you're looking for a bearish SMT, and then a low if you're looking for a bullish SMT. And that right there will wrap up this SMT divergence video. I hope y'all enjoyed it very, very much. If you found anything educational, again, like and subscribe. It helps me out a great ton. And don't forget to go to my other socials and check out my TikTok and Instagram and Discord, all located in my YouTube channel description. Thank y'all. Have an amazing day. See y'all later.